Tuesday, January 24th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how sterling is approaching an all-time low. And you might think, well, it was last year we touched 103 versus the dollar. But no, I'm looking at it versus real money versus gold. And we're going to look at why that is happening. Before I start, though, I have some interesting news for you about the channel. I've started posting some of my old interviews as podcasts on Spotify, so you'll be able to find some of my interviews that were quite popular, the ones with Clive Thompson, for example. I've posted the first two there. And just go on Spotify and search Maneco 64 and you'll find them there. And I'll probably be doing more of that. I'm not going to put every video, turn it into audio podcast, but just a few every week or maybe a few times a month. And I think a lot of you will appreciate that. A lot of you have asked me in the past, and I finally have gotten to do it myself. I'm not a tech guy, so I had to search on Google how to and all that, and I figured it out yesterday. Now back to the UK. So yeah, we saw yesterday, of course, gold and silver got hammered pretty badly. It was actually silver that led the way on the way down, and a lot of paper thrown at it, of course. But I think the reversal is very positive. And this morning, we're starting to see it go back up, and we're seeing XAU GBP, which is the price of gold in sterling, continue to rise. We are now at 1564, as you can see here from this chart, and we're very close to a triple top at around 1578. So it's only a matter of about 15 pounds till we reach the all-time high, and I think it's ready to break out. Whether it's through the gold price rising a lot versus the dollar, and the dollar staying stable, or sterling and the dollar staying stable, or the pound falling, it doesn't really matter, I think. So why is it more important to look at the pound versus gold? Well, because gold is the ultimate form of money. As JP Morgan said, gold is money, everything else is credit. And I spoke to Clive Thompson the other day. I interviewed him again, and he did a little study of how many ounces of gold over the years you could have bought with 10,000 pounds. So pre-1971, for example, with 10,000 pounds, you could have bought 685.8 ounces of gold, troy ounces, that is. Back when I started looking into gold and buying a little bit of gold back in 2002, with 10,000 pounds, you could buy 45 ounces. So that was a huge move lower. But right now, as I speak here, you can barely buy just over 6 ounces of gold with 10,000 pounds. So that's what gold show. It shows the debasement of the currency versus real things. And again, I warned back in 2016 when I was talking about Brexit, because Brexit was the big thing in 2016. That many people will use Brexit as a scapegoat for the coming inflation. And if you don't believe me, you can search my channel for Brexit videos. And lo and behold, a lot of people are doing so. But the real culprit for the debasement of the currency is the public sector finances. And we got news today that it's getting only worse. So UK public sector borrowing soars more than expected. Well, not surprising to me, ONS figures more than double to show the highest December borrowing since monthly records began in 1993. So we'll see why this is happening, why the currency is going down the drain. And this is not surprising. And when they set up these programs, the government, to help people with their fuel costs, energy costs, yeah, and I have to admit it, I'm getting like 66 or 67 pounds a month of late. But that's just like a false economy, because I'm really paying for it, and so are you. So UK public sector borrowing more than doubled in December, driven up by higher debt interest payments. Yes, that's what happens when interest rates go from below 1 to above 4, like they did late last year. That's bond yields, right? And the government had done a lot of borrowing below those levels. So when they get to issue new bonds, the cost is a lot higher. And they have to also fund the index-linked bonds, which are a huge part of the national debt. I've spoken about the index-linked bonds. It's a big percentage of the debt. And the government's measures to help households and businesses with soaring energy prices. So this was just in December. We haven't seen what's going to happen in January. It's been pretty mild in the beginning of January, but in the last week it's been very cold. So this is the kicker here. Public sector net borrowing hit £27.4 billion last month, up from a revised $10.7 billion in the same month in 2021, the highest December borrowing since monthly records began in 1993, according to data published by the Office for National Statistics. The figure was much higher than the $17.7 billion forecast by economists polled by Reuters, and well above the $17.6 billion forecast in November by the Office of Budget Responsibility, the OBR, the UK fiscal watchdog. So here we have this new government, this new chancellor, who's supposed to make things better, as opposed to Kwasi Kwarteng. And they were upset, the establishment, that Kwasi Kwarteng ignored the Office for Budget Responsibility. But as you can see, their forecasts seem to be pretty useless. So have things improve? I don't think so. Watch out, gilt investors. I think you're getting a little bit of a reprieve right now. So it continues. Public borrowing rose largely because of a sharp rise in spending on energy support schemes and an increase in debt interest, said the ONS. And I would add, they've had it pretty easy because a lot of the energy prices have dropped quite a bit in the last few months. Can you imagine when they rebound this year and going into the winter this year? Because this support schemes are supposed to go on until, I think, April 2024. So I don't think it's going to get any better. Higher interest on government debt cost $17.3 billion last month, highest December figure since monthly records began in April '97. Right now, we are helping millions of families with the cost of living, but we must also ensure that our level of debt is fair for future generations. Yeah, right. This is what Chancellor Jeremy Hunt said. The cost of servicing government debt has risen sharply since mid-2021, largely as a result of higher prices. They call it inflation. I say it's higher CPI and RPI, with the interest payable on index-linked gilts rising in line with the retail price index. And we haven't even gotten that much of an increase in interest payments from the issuance of new bonds at higher levels of interest. That's also going to kick in, I would say, pretty soon. So here we go. Public sector borrowing in the financial year to December was 128.1 billion, 5.1 billion more than borrowed in the same period last year, but 2.7 billion less than forecast by the OBR. So I think our total GDP is just over 2 trillion. So right now we've already done about 6% of GDP in deficit spending, and we've got January, February, March, another 3 months. So it's going to be near 10% of GDP, I think, the deficit, which is unheard of in times of normal economic growth and no crisis. I mean, this is what we had back after the '08 crisis and in 2020 and 2021. So that is why we're going to continue to see the debasement of the British pound. And this is going to happen, of course, everywhere else in the West. I see that Europe now and even the UK are looking into increasing spending to help the green energy movement, because they're not happy with the fact that Joe Biden has thrown so much money at that sector in the U.S. through the Inflation Reduction Act. So yes, Europe is not happy. I saw that Germany and France are thinking about increasing spending massively in that sector to compete with the Americans. And I wouldn't put it past Mr. Hunt and the UK to do the same. So I don't think it's going to get better in that sense. So let's quickly look at where the markets are then. This morning, it's 8:27 a.m. London time, of course. We've got spot gold at $1939.50. It's up just over $8. The high has been $42.76. So that's a new high here. It's the highest level, let's see, since April 2022. So gold continued to trade up. Silver, of course, got hammered massively yesterday. It has been able to rebound. It's up about 19 cents at 23.63. Of course, the 24 or 24.50 level is still the key level above. The stock market, the Dow futures is down 25, NASDAQ 100 is down 14, S&P is down a couple of points, just above 4,000, of course. To the currencies, you'd think sterling would get hit hard after those data, but actually is up about 0.2% at 124.02. The euro is up the same 0.2, just below 109. The dollar's down 0.5% versus the yen, just above 130. And the dollar's unchanged versus the yuan, 677. I think the Chinese markets, don't know if they're still shut for their new year in China. Let's quickly look at the ruble. Dollar's at 68.56, pretty steady, no change there for the dollar ruble. For the Aussie dollar, we're at 70.30. It's unchanged, but I noticed we've gone up a little bit since yesterday. We were trading around 70. The dollar is down slightly versus the Canadian dollar, 133.66. The Kiwi dollar is up 0.25% at 65.05. Platinum is up about $4, trading around 1,053. To the other commodities here, WTI crude is unchanged at 81.66. Brent is down slightly at 88.02. High-grade copper is unchanged at 426.20. Let's quickly look at the bond markets. The 10-year yield is down about 2 basis points at 350. The 2-year UK gilt yield is unchanged. The 10-year is up about 4 basis points at 336. The 30-year is up 1 at 372. So I wouldn't be surprised if the Bank of England's in there actually buying these. Yes, they're supposed to be doing QT, but I haven't heard anything about that. So let's just quickly look at that 10-year JGB yield. Well, it's at just above 40. I think we went down to around 37 yesterday. So still below 50. I was reading an article from a financial publication in Japan a couple of days ago, and it said that there's speculation that the Bank of Japan could actually do the yield curve control against the 5-year JGB yield because it's a lot lower. It's at like 0.175, and just let the 10-year go because that 10-year JGB yield should be a lot higher. It should be, well, if it was going to compensate investors for the rising cost of living, it should be more than 4% because the Japanese CPI is like 3.8. But anyway, I wish you all a great day. Take care. Bye.